Welcome in traders. In this video, we're going to go over today's price action. We are currently looking at ES. The time frame we are using is the 2000 tick chart, and the only supportive indicator I use is the 21 EMA, which is this thin purple line oscillating in between the candlesticks. Other than that, I solely rely on price action and trend lines to look for high probability setups. Now, as I always do, I like to mark the pre-market highs and the lows. And these play a huge role, especially during the trading session, because we'd like to see the reaction we get at it. Now, during this pre-market session, we were bouncing between the resistance and the high. Now, this is considered a healthy range when the price is contained between this resistance and the support. Now, as the bell opened, we can see a strong push momentum breaking through this resistance. Now, usually most breakouts will fail, but it didn't here, which is totally normal. This indicates that the market is going to trend in a different direction. And as you can see, during this market cycle, price ended up breaking and slicing through this resistance and pushing higher and higher with a series of higher highs and higher lows. Once you see that, you can get the confidence to know that we are now in a trending market, which in this case is a bullish trend. And initially, I had the trend drawn like this, right? This is all in hindsight, but when the candles are printing, I have it drawn something like this. I had a break and a new high. Okay. I had a break and a new high. The reason why I put it here is, especially when the price doesn't touch the EMA, sometimes the bulls want to see a real EMA reclaim or a touch before making a new extreme. So once the candles loaded a little more, I ended up widening it and I ended up having a break and a new high here. So now what do? Well, we need to wait for the next market cycle. Usually after we get a break and a new extreme, in this case, a new high for this uptrend, we either can wait for a consolidation, we can see a reversal, or a continuation. Now, if you go ahead and you examine the behavior of the EMA, and as I always use the analogy, the EMA is almost like a compass. It'll lead you where you want. You just need to look for the high probability setups, right? And if you look at it, we are starting slowly but surely trending higher and higher, right? Where each pivot is higher than the other, and we're respecting this EMA fully. You know, the sellers can't even dip prices below. This support is now acting as a resistance. You could even raise it a little bit. And once I saw that and we kept getting additional pushes higher, I then adapted to a spike in a channel pattern. So what you initially want is you want to find the trend that geometrically aligns with the market, something where you can get some confirmation touches. Doesn't have to be perfect, it just has to be close. So I ended up drawing it something like this and ended up having a spike in a channel pattern. Let's delete this so it can just be a little bit more clear. Now, once I saw this, it even looks great if you zoom out, nice geometrical formation, and we had some overshoot. Now, I don't need an RSI indicator to let me know that something is being oversold. My trend lines will give me the information and will let me know when that occurs. Now, what overshoot or overbought means is prices being a bit overbought, and we can expect a stronger reversal or a stronger correction. So as I always tell my students, it's best to draw it wider if you can, or if it's like a two-legged move, that's more enough to know that the sellers are out. So in this situation, we can draw it a bit wider, right? We had overshoot, we anticipate for the price to reverse stronger. Now, let's say we never had overshoot. You have to draw the correction tighter, something like this, and you can look for a second entry long, right? But since we had overshoot, I ended up drawing it a little bit wider like this. You can reason and negotiate to have a two-leg move, but I liked it like this, especially because we're starting it from this recent pivot, this high pivot, right? So I ended up drawing it like this. And what I was looking for was for this downtrend to get a break in a new low, right? Because although we are looking to take a long, we have to respect the bearish corrections. And in this case, I wanted to see a break and the new low. Or if we had a strong reversal pattern above the EMA, a failed second entry short, then I would have taken that for a long position. So let's see what happens. We had a break, new low. So what did I expect now? Well, I expect price to now push above the EMA, right? So we can look for a long position. Now, since this correction was a bit long and prolonged, I was looking for a reversal pattern, but we couldn't even push above the EMA. Now, this happens and you can expect it after overshoot. You can expect a full-blown reversal. So, what I like to do, and I always recommend, from where the move started, so we started the spike in a channel pattern here, you start from the bottom pivot and you bring it to the highest point, right? This high that we made. And what you want or to pay attention to is if we get a 50 to 60% retracement, forget about this uptrend. And that's exactly what happened. Now, this was a bit confusing because we retraced well below the 60% threshold. So at one point, I deleted this uptrend and I was focusing on looking for shorts, right? We had overshoot. Instead of a small correction, we ended up having a full-blown reversal. I also found this spike in a channel pattern for this downtrend. So at one point, I was considering looking for a short. So I was actually looking for a short around here, this recent pivot, this recent low. I was looking for a second entry short. Now, using the counting technique, and we also have to draw the mini corrections. We don't want to go short while the bulls are still in play. You want to make sure we're looking for high probability setups and we're not going to get caught in any traps. So counting from this recent low, we have a new low, first entry short, pull back, second entry short, and we have a lower high over here, right? And it's also a triple test. But the issue is if we zoom out, the EMA is in the middle of these bars. There's congestion. This means indecision, and it can also be a small range, right? You don't want to enter during this, right? Because at this point, the odds are against you, and you can get caught in this congestion. You can have a breakout that might trigger a bit too high before you get the initial move to the downside. So when this happens, you can do one of two things. You can wait for a failed breakout, which is when price breaks above and it fails, which it did here, but this is such a weak bar. Or you can wait for a breakout. So we can wait for a price to break below this threshold, push higher, and we can look for a lower high. None of this happened. This was a straight congestion. I waited and I was patient, right? You get rewarded for being patient, not gambling. So once that happened, I was just patient, and then look what happened. We ended up pushing higher and higher. So I ended up zooming out and I noticed that, you know what, maybe the Bulls are going to get a new extreme for this, which, was super confusing because we were traced well over the 60% mark, but today was very volatile as far as the pivots. So you have to respect the trend. You trade what you have, not what you want. So once I saw that, I adjusted and I was looking for a long position, even if I, you know, invalidated this spike in a channel, we still have to respect this uptrend. So price still needs a new high. So I was looking for a second entry long using the counting technique, counting from the recent high. We have a new high, first entry long pullback. This would be the second entry long here. Now the issue is we're not even at the EMA. Now a lot of you guys might wonder what's so important about the EMA. Well, if price doesn't test the EMA, there's a good chance it will, right? It's almost like a magnet, and price likes to get drawn to it. And usually, what we want to see is a rejection, and for the bears to get bought out, right? So over here, we didn't even touch the EMA. Once I saw that, it's super far. If you took it, I see why, but is it a high probability trade? Definitely not, because what can happen is price can get driven a bit lower, right? Then touch the EMA, and then you can get stopped out. So I definitely wouldn't even label this as a good trade. So we ended up having a break and a new high, right? And not only did we get a new high for this mini uptrend, we also had a new high if you wanted to consider it for this uptrend, right? Or this spike in a channel. So now we had a break, new high. We had additional push higher, but not enough for me to look for any wider alternative, especially that, nothing really fits well, especially after a break, a new high, and a new high for the bigger channel. So this is where you kind of sit on your hands and you wait for the next market cycle. Let me delete this so I don't overwhelm you guys. So then, we had a nice downtrend, break, new low. Can we go short? No, the downtrend just played out. You want more information. And notice how we kept pushing lower and lower. and we couldn't even break through the EMA. Now, this is a great indicator that the sellers have momentum, and once you see price not even touch the EMA, this is when you can start considering a spike in a channel, similar to what I drew before for the bullish side. So we ended up having this spike in a channel. Um, at first, I initially had it drawn like this. I did have a little overshoot here, right? But we ended up pushing higher and trading lower so you can adjust your overshoot, right? Because it's not overbought. Once a correction is made and you push lower, you can adjust your trend lines, which is what I did. Now, we're looking to take a short position. Why? Well, because this downtrend needs a new low. If it's great, EMA is holding the whole time. So let's see the reaction at the EMA. Now, a lot of you guys might think, was it two legs down? No, it's a series of, you know, lower highs and lower lows. And as you can see, it's a great spike in a channel. Usually a two-legged move would be kind of like one leg down, a nice spike up, followed by a second leg down. But this just geometrically looks like a spike in a channel. And I wouldn't even consider it two legs down. So I am still looking to take a short position. Now, counting from this recent low, we have a new low, first entry short, pullback, second entry short. Now, this second entry short, this green candle is not ideal. It's very strong. We closed above EMA barely, but this is not a high probability setup. I was looking for a double bar entry, meaning I wanted this bar to close below it. We didn't. So if you took this, I mean, it worked for a quick scalp, especially if you did a limit order. And the ATR today was, kind of low. So 3 point scalp, you would have caught it. Not an ideal trade. Now, did we make a new low? We got close. So the low was 42 and a quarter. Over here, we got 42.50. Now, this is an area where you want to be a bit more careful. Reason being is sometimes the sellers will count this as a new low. So what you want to do is just pay attention and see the reaction and the correction at the EMA. Now, if you get a very strong reversal slicing through the EMA, then you could count this as a new low and invalidate any more shorts for the time being. But look and pay attention to the EMA. It is holding almost completely, right? The buyers are not breaking through this. We're holding below. And counting from this new low, we have a new low, first entry short, pullback, second entry short, right? And also, this uptrend had a break and a new high. And we have a small resistance forming here. If you can pay attention, we have one, two, almost three tops here. Very beautiful signal bar closing well below the EMA. Nice stem. Any buyers here or any bulls that were looking to long definitely got stopped out because usually their stops go, about a quarter above here. So any buyers who were still looking to go long got stopped out here, and a great bull trap, as I like to say. So this over here, great bar. This is actually a trade that I took. I liked it, even though it looked like we made a new low, but we didn't fully make one. Sometimes the bears want to, test the real low, and you just have to pay attention and watch the EMA and the reaction at it, right? Over here, as you can see, barely breaking the EMA, great second entry short here. I did a bit of a limit order, and it was a good 3 point scalp where I entered. And then we finally had the real low right here. We had a break, new low here. We had additional small pivots, but I was also considering maybe a spike in a channel, but there was nothing really clean. We just had a break and a new low. So if we kept having additional pushes, I definitely would have considered. But once you have a break and a new low, my rule of thumb is, depending on how the EMA is, like over here, price was holding below it the whole time. Then you can look for a spike in a channel or a wider downtrend, or if you have two additional lows after your recent low, right? So we had a break, new low here. If you have two strong pushes again, then you can consider, but these are very small, almost like we're kind of bottoming out here. Usually when they're lower, the lower lows are smaller and there's not that much, ATR with them, then you can definitely be more cautious. So then we ended up pushing a little higher, kind of going sideways. You can definitely draw a small little trading range here because price is, contained here. And let me get rid of this and we can use this, right? Or put it a little lower where that recent low is. And as you can see, price is going back and forth between this range. But the issue here is that we are getting close to the close. Um, since we traded down, I would be looking most likely, just for educational purposes, to take a short. And once you're in a range, you have to buy low, sell high. So since we traded down here, I would look for a short after the uptrend played out. There was no good short setups. We have a break, new high. If you were looking to short, you would wait for this to get a break, right? New high here, or attempt to make a new high, and you would look for a lower high over here. And we just kind of broke through it and didn't have it, but that would have been a good setup if there was one, but it was getting late in the day. And that was it. Price action has been a bit slow this week, which is okay. Last week was great. One or two setups in the morning if you are paying attention and diligent. But other than that, I had one trade today, which was the second entry short. I would have loved a second entry long here just for the spike in the channel, because the stronger a trend, the more likely you are to get, a new high or a new extreme for it. So I was definitely anticipating a new high here. We didn't get it. Ended up pushing higher and making a new extreme. As you can see, even on our way up, there's not really any setups at the EMA. Here too, we didn't even touch the EMA, just such strong momentum. But here definitely we got some good setups, and that was it for today. So I'll see you guys in the next video. Take care.